as part of the strategy of the bank announced a long time ago, we have approached. The bank has continues to look for opportunities for for merger or additional business. As you are aware, we have made a takeover offer to one of the banking entities in Oman, which was, however, later withdrawn on the 27th of July 2023, as per the public available records. Any development, we will be definitely informing also to shareholders. So with this brief introduction, I would like to pass the microphone to Vikesh Marina, the CFO of the bank, to go through the financial results. And in the second half of this session, we will be more than happy to receive your questions, if any. Thank you very much.
Thank you, Mr. Abdul Hakim, and thank you everybody for joining today's session, which is the second quarter, first half of 2023. I'll be taking you through the investors presentation, which is already uploaded on our website. We'll quickly run through the general disclaimer, which is, I'll be shying away from making any forward-looking statements. Moving on, slide number 3 shows the agenda that we plan to cover this afternoon. We'll be looking at Bank Dhofar's overview in terms of its financial performance and some key performance indicators. Moving on, we'll be looking at the operating environment, the business strategy, and the segmental overview of the bank. And then we'll deep dive into the financial performance, concluding the presentation with some key takeaways. Slide number 4, which you can see on your screens now, shows Bank Dhofar at a quick glance as at the end of June 2023. Our total income as at the end of June 2023 stood at 74.3 million Omani Riyals as compared to 69 million the previous year, same time, an increase of almost 6%. Our net profit at 18.4 million, which again is an increase of almost 12% as compared to the same period previous year. Our net interest margins stood at 2.24%, which was a reduction of 21 basis points, and I'll cover this in my subsequent slides in terms of what is the reason behind this decline in the net interest margins. Our ROA stood at 0.8%, an increase of almost 8 basis points. Our return on shareholders' equity stood at 6.7%, and if I am to include the Tier 1 capital that is there outstanding, the return on equity adjusted was 5.2%. Our net loans and advances stood at 3.42 billion, which is largely flattish if I am to compare it with the end of December 2022, mainly because of some of the prepayments that we have seen. And again, I'm going to touch upon this in my subsequent slides. However, if you are to compare it with the same period last year, which is June, it's increased by almost 3%. My deposits stood at 3.07 billion, and if I am to compare again with the end of 2022, it's an increase of almost 6.3%. And as Mr. Abdul Hakim mentioned, our branch network increased to almost 100 branches as at the end of August, and this is contributing to an overall increase in our deposit base. Our total assets stood at 4.67 billion. Cost to income ratio again is a wonderful story, and I'm going to touch upon this in my subsequent slides. Stood at 45.5%. ECL coverage ratio declined by 8.7% to 88.7%, and our capital adequacy ratio stood at 19%, which is an increase of almost 1.8% year on year. We continue to be one of the leading banks in Oman, with shareholding of circa 25% by GRE's pension funds. And our total branch network as at the end of June was 97 branches, however, now stands at close to almost 100 branches. We have almost 14 nationalities of full-time employees working with us, with 43.3% employees being women, giving us a good gender balance. Our credit rating, we are rated by both Moody's and Fitch, and our rating was at BA2 with a positive outlook as far as Moody's is concerned, and BB with a positive outlook again as far as Fitch is concerned. Moving on, looking at the overall financial performance, you can see the balance sheet, the income statement, and the key ratios. And again, as I said, the loans stood at 3.420 billion as compared to 3.43 billion, largely flattish, as we have seen some prepayments both on the corporate side, as well as we had one of the sovereign exposures, which was both prepaid and repriced to a certain extent, leading to an overall flattish loan as compared to the last 6 months. We, however, did see increased lending on the retail side, and which is again a direct outcome of the increased branch network that we are seeing. Investment securities was marginally lower as compared to the same period, or rather December 2023, mainly because of some of the repayments of GDBs. Our customer deposit stood at 3 billion. Again, as I said, an increase of almost 6%. Looking at the income statement, the operating income stood at 74.2, an increase of almost 4.7 million, which is a 6% overall increase, despite marginal reduction in the net interest income. We saw a significant increase in our fee income. And again, I'm going to touch upon this in my subsequent slides. Operating expenses continues to be a good story. We were largely flattish as compared to the same period in June 2022. In fact, marginal reduction as compared to last year, because of various cost saving initiatives that the bank has undertaken. Impairments stood at 18.7, which is 19 million, an increase of almost 15%. Our gross ECL, in fact, went up from 21.6 to almost 28 million in the same period, net of write-offs. If I see, it was an increase of almost 15%. Sorry, net of recoveries, it was an increase of almost 15%. This gave us a net profit of 18 million as compared to 16 million, an increase of almost 12%. If I look at some of the key ratios, which is the table on top right, our total capital adequacy as at the end of June stood at 19%, with CET1 core capital at 14.1%. Our non-performing loans ratio stood at 5.86, which is 5.9%. Our return on shareholders' equity at 6.7 and adjusted for AT1 stood at 5.2%. ROA at 0.8, cost to income at 45.5, and net loans to customer deposits at 111.3%. We have almost 1,634 employees as at the end of second quarter 2023, with a market share of close to 12% as far as assets is concerned, and 13 and 12% for loans and deposits respectively. Moving on, next slide, which is slide number 6, shows the trajectory of the bank in terms of its total income, operating profit, as well as net profit over the last 10 and a half years. I did touch upon this slide in my previous presentations 6 months ago. Broadly, the message here which I wanted to communicate is last year, which is 2022, we had the highest total income and operating income at 143 and 73 million. For the first half of 2023, our total income stands at 74 million and 40 million being our operating profit. Moving on, slide number 7 shows the shareholder structure and the asset composition from a shareholder structure perspective. Again, largely stable over the last couple of years, with 25% being held by quasi-sovereign pension funds, giving us a strong relationship with both quasi-sovereign and sovereign entities by virtue of our shareholding and relationship with government entities. The graph on the bottom of the slide shows the total segmental split of both assets and operating income, with our corporate banking contributing to 38% of assets, retail banking at 26%, treasury and financial institutions at 20%, and Islamic at 16%. The income was also pretty much distributed somewhat in the same ratio, with corporate banking at 43%, retail at 23%, treasury and financial institutions at 18%, and Islamic at 23%. The next slide shows the trajectory of the bank since the start of its operations in 1990. Looking closer to 2022 and 2023, very recently we launched our Tier 1 bond issuance, which we repaid $300 million of a tier one and issued another Omani Riyal 115.5 million of tier one issuance, which was one of the largest issuance to be listed on Muscat Stock Exchange for AT1 issuance. And as Mr. Abdul Hakim just mentioned, we have very recently reached the 100 branches network as at the end of August 2023. Slide number 9 shows some of the key credit strengths. We continue to be a leading franchise in Oman, a leading listed bank offering a full-fledged commercial banking business, both for conventional as well as Islamic banking customers and products. As I said, we continue to have a stable shareholding with circa 25% owned by quasi-sovereign pension funds. We operate out of a stable and a growing operating environment with a very prudent regulatory environment by CBO, CMA, and other regulatory bodies. We enjoy a solid and robust capitalization. Our capital adequacy ratio, as I just mentioned, stood at 19.02, which is higher than the regulatory requirement of 12.25%. We continue to operate with a very diversified and smart distribution channel with a branch network of 97 branches as at the end of June, 183 ATMs, 85 CCTMs, 25 fully functional machines, and 4 multifunctional kiosks. And of course, we are supported with an experienced and seasoned management, both for our conventional as well as Islamic business. Moving on quickly, looking at the overview of the Sultanate of Oman. We are the second largest country in terms of size. Our population very recently crossed the 5 million mark, and now we stand at 5.1 million, out of which 57% of which is Omani nationals. The graph on the bottom left shows the real GDP growth, which is again the latest IMF figures which have been published on the 19th of June. 2022 real GDP growth stood at 4.3%. The expectation for 2023, with whatever is happening globally as well as the challenges that we are facing, is expected to be at 1.3%, which is then further expected to accelerate to 2.7% as at the end of 2024. The graph on the bottom right shows the GDP composition, again coming largely from petroleum activities, construction, wholesale, retail, trade, etc. Looking at the banking environment, the Omani banking sector comprises of 20 licensed banks, with 16 being conventional commercial banks, 2 state-owned and 2 fully fledged locally incorporated Islamic banks. The graph on the bottom left shows the total assets, deposits, as well as the loans at the industry level. Total assets as at the end of June stood at 41 billion, with loans at 30 and deposits at 27 billion. The graph on the bottom right shows the progression of the Islamic banking assets over the last 5.5 years, with the assets growing from 4.4 billion to 7 billion as at the end of June, with a CAGR of 8.8%. Looking at the bank's strategy, the box on the left-hand side shows our purpose, and again, I quote: "Our purpose is to become the most preferred banking partner, which is trusted by our customers for exceptional services and experience." Of course, which is largely relationship-led, easy to deal with. We do look into the interests of long-term interests of our various stakeholders and provide responsible and secure banking services. With customers being at the center, with digital engagement being one of our key strategic pillars, broadens our reach and augments or supports the expanded branch network that we've been following or as a strategy over the last 18 months. Our performance culture, where customer comes first, operational excellence, giving the best-in-class services to our customers, and deploying future-proof technology for ease of for our customers. Moving on, whilst we continue to branch and ATM network, our digital banking initiatives do augment that reach and helps us in providing, again, a best-in-class services to our customers. The following slide shows various digital initiatives that the bank has undertaken over the last 2, 3, 4 quarters. We have launched multifunctional kiosk. We have partnered with various fintech providers. The launch of soft POS for our merchants, new mobile banking app, as well as WhatsApp banking, WhatsApp services for our customers to ease the banking experience and make it more efficient. We have tied up with ICICI for our remittance services. We are providing enhanced card management services through our digital banking platforms and also managing our remittance business through our digital banking platform, increasing and making it more easier for our customers to work with our bank. In terms of our business segments, these are following are the key business segments that the bank operates with. We have the retail banking group, the wholesale, government and investment banking division, treasury and financial institutions, as well as the Islamic banking business. As was briefly mentioned earlier, we service almost 351 retail customers as at the end of June 2023, providing various retail banking products through a wide range of branch as well as ATM network that we have. We support or service almost 22,800 wholesale and corporate banking customers, and again, across a wide range of industries, which includes trading, manufacturing, servicing, as well as contracting. Government banking department continues to be one of the key departments which works closely with government and quasi government entities, both on the liability side as well as supporting other businesses, which is the corporate as well as retail through this channel. We are also expanding our investment banking activities through a recently established investment banking department, and also expanding our asset management, private banking, as well as corporate advisory services, the benefits of which you already started seeing, and you'll see more of it in the coming quarters. Our treasury and financial institutions departments manages the funding and liquidity requirements of the bank, and also supports the corporate customers with various products such as money market instruments, currency swaps, interest rate swaps, options, etc. Our financial institutions department has established a wide range of network with our correspondent banks and gives that benefit of that network to our corporate and retail banking customers. Our Islamic banking division, which was established in 2013, continues to grow strongly and offers various Islamic banking Sharia compliant products to its retail, corporate, and treasury customers. The split of income, which is the net profit and operating income, is shown in the bottom of the presentation, with operating income at 24% being contributed by retail, wholesale at 43%, treasury at 16%, and Islamic at 17% out of the total operating profit of the bank. Moving forward, the financial performance, again, deep diving into the financial performance of the bank. The consolidated P&L is what is being shown here in terms of the key movements. The interest income declined by almost 3.47% as compared to the same period last year, and stood at 56.996 million. Again, I'll probably spend some time here explaining the key reasons why we have seen a decline in the interest income here. You would recall this was one area that worked very well for the bank as we increased our margins last year in 2022, and it stood at 2.51%. We have seen a significant rate hike, which started somewhere in March 2022, and with over 11 rate hikes, the overall benchmark rates went up by almost 525 basis points, which is somewhat getting reflected both on the yields on the assets as well as the cost of funds. And I've got a separate slide where I'll show how exactly it has impacted our overall cost of funds. We did have some accounts which got classified in the first second quarter actually of the year 2023, which has led to a marginal decline of the overall yield on those accounts. One of these accounts we are expecting to we are expecting recovery from that account in the third quarter, which should start reflecting both on my top line as well as ECL reversal. As I briefly mentioned, we also had one of the sovereign entities, a loan to a sovereign entities, which was partly repaid as well as repriced. Because of that, you've seen our loan growth to be largely flattish, and there's a slight decline on the interest margins because of the prepayment of that entity, which is also getting reflected in my net interest income. In addition to that, CASA also in a way plays a role here. Whilst you have seen the CASA largely declining at the industry level, so with the rate hikes, we have seen a change in the customer behavior where customers are moving from CASA products to term deposits. For us, the CASA, whilst it has largely stayed flattish and supported by the increased branch network, our total CASA to total deposit percentage, if I compare it with my peers, is slightly lower. It is at 44%. Now that obviously has a role to play in terms of cost of funds. So as we saw the interest rates getting hiked, and given the nature of my funding profile, we saw the cost of funds outpacing the increase in the cost of yield or the yields on my assets, resulting in a decline in my net interest income. Fees and other income, again, we have a fantastic story here, which went up almost 57%. And again, I've got a detailed slide where I'll explain the key drivers of the increase in fee income. Operating expense, again, a good story here, largely flattish if I am to compare with previous year, despite the increased expansion of the network as well as the new business streams that we are looking at. And again, I'll touch upon this in terms of the key drivers of our cost to income ratio. Net of this, my operating income went up by almost 13%, an increase of almost 4.8 million, and stood at 40 million as at the end of June 2023. Net provisions, the bank continues to make ECL for its NPL exposure, went up by almost 15% and stood at 18.7 million. I briefly mentioned this is actually the net ECL, and if I am to look at the gross ECL, which is net of recoveries, it went up from 21.6 million to 28 million, as has been detailed in my financial statements and its disclosures, giving me a net profit increase of almost 12% as compared to the same period last year, and net profit stood at 18.4 million. Looking at the Islamic banking business, again, we have a good story here with my net interest income going up from, or operating income going up from 10.8 to 12 million, an increase of almost 17%. Cost went up from 6 million to 5.5 million to 5.9 million, an increase of 6%. Operating profit, an increase of almost 29%. Net profit, an increase of almost 22%. Customer financing and customer deposits both increased by 18% and 12% respectively. Moving forward, moving ahead, slide number 20 shows the gross loans and advances. As I mentioned, the gross loans, if I am to compare it with June of last year, showed an increase of almost 3%, almost 100 million. But if I am to compare it with the end of December 2022, it was largely flattish, mainly because of some of the large prepayments that we have seen on the corporate book, as well as one of the sovereign exposures, as I mentioned, which was both partly repaid as well as repriced. But if you see the waterfall chart on the top right, which is the evolution of gross loans, you would see the retail lending has actually increased if I'm to compare it with June of last year. This is again, with the expanded branch network strategy, which is contributing to an overall increase in my retail lending. The gross loan composition is shown in the bottom of the chart, both in terms of the sector as well as the products, largely pretty much the same as previous quarters. In terms of credit quality, which is slide number 22, The slide or the graph on the top left shows the non-performing loans, which stood again largely flattish at 5.86%, with my NPL being at 212 million in absolute value. The stage 2 exposure was again flattish at 773 million as compared to 776 million as at the end of 2022. The exposure ECL coverage, however, declined to 6.91% as we set aside provisions to write off some of our exposures. Non-performing loan coverage ratio did decline from 101% to 88.7% as of the first half of 2023. As I briefly mentioned, we had some large accounts which were classified in the second quarter of 2022, and we did do some technical write-offs to 2023, and we did write off some large account, which was fully provided in the second quarter. That has resulted in a reduction in my overall coverage ratio as well as the stage 3 coverage ratio. As you can see, it came down from 66 to 57.8%. Having said, as I mentioned, we continue to set aside provisions very prudently, which has gone up by 15% net of recoveries. And if I look at my gross provisioning, it went up from 21 to 28 million in the first half of 2023. Next slide talks about the funding and liquidity mix. The deposits, which went up from 2.9 to 3.07 billion for June to June, was an increase of almost 4%. And if I compare it with December, it was an increase of almost 6%. What is important to note here is the CASA percentage has largely stayed flattish, or in fact, an increase of almost 1%, whereas we have seen a behavioral shift in the market where CASA has seen a declining trend on account of increased interest rates, where customers are taking advantage of the higher rates. However, for us, and with the help of increased branch network and greater geographic footprint expansion, and a digital strategy has helped us maintain that CASA ratio. Having said, as I mentioned, our CASA ratio, if I am to compare it with my peers, is on the lower side, and that's getting reflected in the net interest margins. Clearly, an opportunity for the bank with the expanded branch network to increase the CASA base in the coming quarters as we stabilize and manage our expanded branch footprint, increased branch footprint. The LCR and the NSFR stood at 131% and 112% respectively as at the end of June 2023. Slide number 23 shows the performance or profitability and performance. And again, I'll touch upon the graph that you can see on the top left of the presentation. As you can see, two boxes on the right hand side, which is 2022 and June 2023, 71% of my net interest income, or my interest in 71% came from my net interest income from conventional business as at the end of 2022, and 14% from profit from the Islamic banking business, which was largely balance sheet funded business. And total fee income contribution was only 11 plus 4, which is almost 15% or 14.5% to be precise. Clearly, that has shifted towards a higher fee to total income ratio, and which is the guidance that we have given in our earlier calls during the start of the year. So if you look at my June numbers, 23% came from the fee income, whereas 77% came from the funded side of my balance sheet. Now, this is definitely or clearly has been one of the key focus areas and was a historical legacy issue which we have tried to correct in the year 2023. This is also being supported by the increased branch network as well as the increased customer base that we have been able to attract through the expanded branch network and the digital penetration that we have managed to achieve over the last 6 to 12 months. The focus has clearly been on some of the fee income lines, which comes from corporate businesses, some of the trade products, syndication business, credit cards, and largely transaction-led business as well. Going forward, as I mentioned, we are also looking at our asset management, corporate advisory, as well as private banking business, which should only support the fee income and allow us to grow it in the coming quarters. So this is an area that we'll continue to focus on in the next few quarters as we are catching up with the market total fee to total income ratio. Operating expenses, again, the next slide continues to be a good story. Largely, the cost to income ratio was upwards of 50% up until 2021, peaked at 57.2% in 2021, and since then declined to 48 and 45% as at the end of June 2023. Now, again, whilst we continue to expand our branch and network and digital channels, there is a very astute focus on managing other lines of cost. Every business runs with a KPI of managing its cost quite actively, and that is something that is getting reflected in our cost to income ratio. There are various initiatives that the bank has undertaken on the premises side, where some of the departments have been centrally located, moved, etc., which has helped us save the occupancy cost. In addition to that, the branch network expansion that we have done, the staffing of that has largely again been supported through internal reallocation, allowing us to manage our costs better. So with continued cost control, it has allowed us to invest into the expansion strategy, as well as recruitment of some of the key specialized functions that we are looking at, which ultimately should help us expand our businesses in the coming quarters. Next slide, I know I'll quickly run through this. The next slide shows the asset yield as well as the cost of funds and net interest margins. I broadly touched upon this in my previous slides. We have seen a 59 basis points in the asset yield with the 525 basis points increase in Fed rates. Cost of funds, however, outpaced the increase in the asset yield at 86 basis points, leading to an overall reduced net interest margins of 27 basis points. Again, whilst our CASA has largely stayed flattish despite the overall decline in the market as well as the increased rates, the expanded branch should actually help us on this going forward as we try and expand our CASA and bring it in line with the market CASA to total deposit ratio. Next slide is on the capitalization. Our capital adequacy ratio, as I briefly mentioned, continues to be at 19.02%, which is again, the bank continues to be robustly capitalized as opposed to the 12.25%, which is the regulatory requirement. We did see a reduction in our risk-weighted assets and stands at 3.7 billion. And we continue to have a good track record of dividend paying history. And in fact, it went up from 2% to 5% as at the end of 2022. Just to conclude my presentations, and again, as I mentioned, some of the key strong stories or positive stories that we've seen in the first half of 2023, with strong fee growth of 56% in the last 6 months. Fee to income, total income ratio has increased to 23%. Operating profit went up by 13.4%. Our cost to income ratio is again a good story and stands at 45.5%. We continue to, in terms of strategy, expand our geographic footprint with low cost branch models. And now we have reached almost 100 branches as compared to 64 branches as at the end of 2021. We continue to focus on improving asset quality with prudent provisioning, and you must have seen our cost of credit has stayed at the elevated levels for now as we set aside ECL to manage our coverage ratios. Needless to say, we are supported with an experienced management team, which is helping us drive our strategy forward. I think with this, I will conclude my presentation and pass it back to Hilal to manage any Q&As that you may have.
Thank you, Mr. Vikesh. Now I will open the floor for the Q&A session. kindly raise your hand and appreciate to switch on your camera and introduce yourself. Yes, Jason.
السلام عليكم.
وعليكم السلام.
مساكم الله بالخير. عفوا عندي الكاميرا الظاهر على التيم ما تشتغل، وبالتالي بكلمكم بس بالصوت، يعني اتمنى تسمعوني عدل.
ان شاء الله نسمعك.
الله يخليك. هلا اخ عبد الحكيم وجوبا. How are you? It's a pleasure to be in this talk, and I hope unfortunately I'll be talking in Arabic to Abdul Hakim, so I hope these guys they will translate you later probably. أخ عبد الحكيم ما بطول. It's a pleasure also to me. أخي عبد الحكيم، أنا أول مرة يمكن أشارك معكم، مرة من زمان اشتركت في جمعية أيام يمكن سنين طويلة. عموما أنا بدخل في الأسئلة طوالي. الحقيقة يعني بالنسبة للاندماج اللي كنا نتمنى نحن كناس مختصين في الاقتصاد. أنا بالحقيقة من الناس اللي هم دائما يشجعوا على الاندماج، اللي هي المؤسسات اللي هي البنكية بشكل عام، لما فيه مصلحة للاقتصاد بشكل عام وقوة في هذه المؤسسات. يمكن نحن يعني ناس من خارج او صغار المساهمين، بس اللهم نشوف اللي هو الرسالة يعني اللي ذكرتوها حسب الموقع. انا بس ما اعرف، يمكن الرسالة ما كانت واضحة بالنسبة لنا. يمكن الاخوان في أونفست كتبوا حسب طبعا هي كل الاندماجات كان عن طريق لائحة الاستحواذ والسيطرة. فالاخوان في أونفست ذكروا ان القانون المصرفي البنك المركزي ما كان في وضع يسمح لهم بمنح استثناءات للتحالف. فبالنسبه لكم يعني كبنك ظفار، الحقيقه انا يمكن حتى لما قدمت العرض الاولي والاخوان في مجلس الاداره في البنك الاهلي رفضوه في اول يوم، انا كمواطن بسيط وكمساهم بسيط صراحه ما عجبني انه هو الطريقه والاسلوب، انه في لبس اليوم ممكن الواحد يرد، يمكن كل واحد له اسلوبه وطريقته. عموما حاولت مرة ثانية، يمكن في أشياء البنك المركزي يمكن من ناحية رأس المال، من ناحية أشياء كثيرة يمكن داخليا نحن ما نعرفها. فهل في أمل أن مستقبلا يعني في ممكن يحاول بنك ظفار كإدارة وكإدارة تنفيذية أن يعني أنا شايف أن عندكم ما شاء الله توسع في الفروع ما شاء الله، وهذا شيء جيد، لكن هو دائما أنا أقول الاندماجات هي الأفضل يعني. فهل في تصور يعني مستقبلي بعد يمكن في بعض الامور يمكن ما واضحه لنا، يمكن البنك المركزي يوضحها لكم تصير افضل، وانتم خصوصا السنه هذه ما شاء الله عملتوا اشياء كثيره للمحفظه الاقراضيه، اشياء كثيره تعديلها يمكن. اتمنى لكم التوفيق. اتمنى اخي عبد الحكيم تعطينا كذا يعني فكره بسيطه، يمكن انا ما ادري يمكن كلامي واضح ولا لا.
شكرا اخي جاسم على مشاركتك، ومشاركتك دائما ثريه للنقاش، يعني للنقاش المواضيع المصرفيه. وشكرا على اهتمامك طبعا بالنظام المصرفي اللي هو طبعا عصب الاقتصاد في البلد. احنا كسياسه بنك ظفار الحمد لله يعني من السابق، يعني جزء من سياستنا هو التوسع سواء اورجانيك ولا نون اورجانيك. فاذا الفرص اتيحت انه يعني الاندماج مع جهات اخرى، احنا منفتحين على هذا الموضوع من سنوات، يعني ما هو جديد علينا. التوسع اللي وصلنا لك ايضا وصلنا من خلال يعني اندماجات سابقه وعزز القطاع المصرفي، ونحن نؤمن بانه زي ما قلت القطاع المصرفي قوي، ويعني مثل هذه الاندماجات وصارت، وفي هناك طبعا مباركه حتى من الجهات الرسميه الموضوع هذا. فلذلك احنا مستمرين ان شاء الله في عمليه الانفتاح على الفرص اذا اجت، لكن هذه الفرصه الان اغلقت حسب ما تم التصريح عنه. وان شاء الله الفرص القادمه باذن الله احنا منفتحين زي ما قلت لك على اي يعني برامج مثل هذه.
اتمنى لكم التوفيق. شكرا على الرد.
الله شكرا جزيلا.
الله يخليك. الله يخليك اخي عبد الحكيم. بس يمكن سؤال بسيط، يمكن انا شايف يمكن اول مره اشوف الارقام مالكم مال بنك ظفار. يمكن نوعا ما المحفظه الاقراضيه كانت فيها نوعا ما من يعني بعض الاشياء اللي هي كانت يمكن تحتاج لمخصصات، وهذا اثر على ربحيه البنك. يمكن حتى ايراد الفوائد اللي شفتها يمكن مصروف الفائده خلال الست شهور هذه، انا اول مره يمكن يعني دائما البنوك او المؤسسات الماليه يمكن اعتمادها على الفوائد، هذا شيء اعتماد الاول، واعتماد الثاني على الرسوم. فانتم صحيح انكم صار عندكم مشكله في الفائده ويمكن لظروف معينه لبعض القروض، ويمكن القروض اللي هي سابقا يمكن ايام كان كورونا، واعاده جدولتها واعاده يعني تفصيلها الى قروض يمكن تحتاج لمخصصات معينه. فهذا شيء طيب، على الاقل مستقبلا ممكن يعطي اول ما تعملوا ريكفري على السنوات الجايه اكيد بيكون له تاثير ايجابي على الارباح. الشيء الطيب بعد شفت عندكم اللي هو الايراد اللي هو من الرسوم والعمولات، اللي كل البنوك يمكن تحاول قدر ما امكن ترفع منها عشان تكون تعادل في الدخل الثاني بالاضافه لدخل الفائده. فيعني الاشياء اللي تصيروا فيها الحقيقه يعني اشياء جيده. البروفيجن مالكم طيب، يعني انتم يمكن في مرحله معينه كان عندكم سابقا، لكن الحمد لله يمكن انتم سارين في الطريق اللي هو المناسب. فنتمنى لكم التوفيق، هذا اللي عندي بس. شكرا.
شكرا جزيلا اخي جاسم، شكرا على يعني مداخلاتك القيمه لنا. وان شاء الله احنا مستمرين في تنميه البنك وتطوير البنك واخذ الاحتياطيات الكافيه بحيث انه يعني يكون البنك دائما في وضع يعني اقتصادي جيد ان شاء الله. شكرا جزيلا اخي جاسم.
اقتراح بسيط اخي عبد الحكيم السوري. الو.
ايوه اخي قاسم، الحين
بس
بسبب
على
ضيق
السريع،
الوقت.
انا شايف ترى انا بس اقتراحي انه مره ثانيه هذه النقاشات اتمنى يعني جزء من الموسم ما شاء الله يمكن ما كان يحتاج التفصيل هذا مستقبلا، يمكن خلال 10 او ربع ساعه، لان معظم الناس المحللين عندهم المعلومات كامله، فبالتالي لو تضغطوا ان شاء الله مستقبلا بعون الله. هذا كاقتراح بسيط. الشيء الثاني والاخير، التدريب والمسؤوليه الاجتماعيه اتمنى يكون في بالك اخي عبد الحكيم، وشكرا مره ثانيه.
شكرا لاقتراحاتك. He's talking about the time frame for
Yes, Bishan.
or the first part and give more for the Q&A, which is will take. شكرا اخي جاسم.
Hello.
Yes,
Yes,
Bishan.
go ahead.
Good afternoon, gentlemen. Good afternoon, gentlemen. Thank you for the presentation. Just a couple of discussion points. Firstly, congratulations on sort of boosting the other operating income. We've seen a phenomenal rise in that. If you could just highlight sort of the key drivers for that, and how do you see that going forward?
Sure, Bishan, I'll take this question. As I mentioned in my slide on the fee to total income ratio, as well as the overall increase in fees, we were actually trying to, I would say, correct one of the legacy challenges that we have had. Our total fee to operating income ratio was the lowest in the industry, as I mentioned, at 14.5% to total income. So there was clearly an anomaly which we were trying to fix. And, we've been working very closely with our businesses, expanding, cross-sell opportunities, expanding the customer base through the increased branch network, as well as looking at, some of the key fee generating products. It was, corporate loans, some of the trade products, including guarantees, etc. The syndication business that we have, the cards on the retail side, bank assurance as a product, as well as overall, with the increased branch network, we also seen the increase in the transaction volume, and all transactional fee related opportunities also came about. In addition to that, we also seen significant increase on the Islamic banking business on the corporate advisory side as well. So all this led to an overall increase in my fee income. So it's not only a product push, it is also a cross-sell push, as well as making sure all the businesses appreciate the importance of non-funded fee income as a component of the total P&L. So that's largely what you're seeing coming out in the first half of 2023. Outlook, as I mentioned, we do hope to sustain these levels, in fact improve on it, because we have been trying to bring in new business streams, such as I mentioned, the investment banking business, we are looking at corporate advisory, we are looking at asset management, we are looking at private banking, and there are various levels of recruitment, specialized positions, etc., that are being filled here. So we do expect this to go north from here over the coming quarters.
All right, noted. Thanks for that. Second is actually it's a two-part sort of it's a comment as well as a query. The comment would firstly be on slide 4, you have mentioned you've given some highlights of the bank and you've mentioned your net interest margin, ROE, as well as adjusted ROE. I just like to point, we highly appreciate that as the analyst community, because often what gets lost is the reported ROE, which does not include the perpetual interest that a bank has to explicitly service. So actually seeing it on a public call, that number out there, no matter how high or low it is, at least shows us that banks take cognizance of an explicit cost of perpetual interest that has to be serviced. Because giving ROE without actually including the tier 1 interest is just half the story. So I just like to appreciate that. And sort of what is the target for the bank in terms of an adjusted ROE, going forward on, let's say, in the next 2 to 3 years? I understand it's on the lower side for bank so far, but what would be a target going forward? It's something that the management has internally discussed or sort of has a benchmark reference.
Thank you, Bishop, for the first comment. We do take feedback from our investors and analysts such as you very seriously, and that is something that we try and reflect every time in our presentations and in our bilateral and discussions. So thank you for that. In terms of our targeted ROE, obviously we do intend to grow from here with getting to a double-digit ROE over the next 3+ years. At 10+ are the levels that we'll be targeting over the next 2-3 years. Obviously, with the strategy that the bank is deploying, which is expanded network, which should help us generate additional CASA, help us generate additional fee. The new business streams that we are looking at should help us generate additional fee income and allow us to expand our customer base. Should definitely help us get there. So clearly, the target is to get to a double-digit ROE over the next 3+ years, Bishop.
All right. And that's it from my side. Thank you so much and wish you all the best.
Thank you. Thank you, Bishop.
Yes, Abbas.
Good afternoon, gentlemen. Thank you very much for the call and for this opportunity. At the outset, I think I'd like to echo Bishan's sentiments in terms of just the transparency in the presentation, the kind of detailed sort of numbers that you've given, the story behind the numbers is much appreciated. So I mean, my first is just a comment to say thank you guys for being so transparent with your presentation and your communication. It makes it easier to sort of appreciate what's going on at the bank. So that's my first real comment. So much appreciated, gentlemen. Mr. Mirani, we spoke about the sort of positive development that's happening. A lot of legacy issues were sort of inherited by this team, and I've seen the sort of concerted effort to try and address that. Now, my first challenge, which you've obviously spoken about in some detail, is when you spoke about your fee income and you compared it to the rest of the guys in the sector, you said, "Hey, I'm underperforming. I'm going to try and fix it." You said this a few calls ago, and we've already seen a positive development. So there's a lot of there's definitely a lot of credibility, when we talk to you. Now, when I look at on the provisioning side, the bank is still lagging its peers when it comes to the provisioning coverage ratio. There's no real easy fix because it means biting the bullet, providing higher provisions for longer, effectively putting profitability and your adjusted ROE sort of numbers in some pressure. How do you feel? How do you see this sort of provisioning coverage ratio evolve, where you can be comfortable, when you compare yourself to the rest of the guys? Just wanted to hear your comments on that.
Thank you, Abbas, and thank you for again your first comment with regards to transparency. Appreciate that. Coming to our provisioning coverage and the provisioning that we are currently carrying, you must have noticed from the accounts. We, as I also mentioned during my presentation, we had a few, actually two large accounts which were classified in the second quarter of 2023, which had an impact both on the top line with interest suspension In addition to that, elevated levels of ECL had to be deployed. Essentially, these are fully written off accounts. Or one of that was fully written off accounts, which had to be written off, thereby leading to a reduced coverage ratio. Now, if I compare myself with the industry over the last 8 quarters, we have tried to maintain a high level of provisioning, essentially to manage such challenges that we are seeing. Obviously, when we came out of the COVID crisis and some of the key some of the challenges that we've had with some of the exposures that we were carrying, we are slowly building up our provisions and also managing our NPL ratios at the same time through write-offs. And you have seen, as I said, increased provisioning from Bank Dhofar as compared to its peers, and at a gross level, at 28 million as compared to 21 million last year. So yes, we are trying to manage both profitability of Abbas, to answer your question, as well as the coverage ratio and the NPL ratios at the same time. Not an easy fix, but trying our best to see how we best manage our profitability and asset quality going forward.
Thank you. Yes, sir.
Said, absolutely, we recognize that, and I think in the last call as well, we said that we are doing a bit of catch up and aggressively providing for what we need to, and hopefully within a year's time, we should have crossed the hump to become comparable with the industry.
Got it. And my second question is, Mr. Ojeli, right off the bat said, we've been very transparent with the communication regarding our intention with Ahli Bank merger. If there's more to report, the acquisition, sorry, if there's more to report, we'll let you know. And I appreciate and respect the statement from the CEO. My question is, when the merger and the acquisition talks was going on, as the analyst community, we never really had a chance to understand your sort of, your view on, why it was so important for Bank Dhofar to sort of go ahead with this merger. Because what I see is CBO rejected a merger on different grounds, on regulatory grounds, where 74% of Ahli Bank shareholders agreed with Bank Dhofar offer, which means that those 74% were buying into your vision, of you merging the two banks and making something of this entity. So my question is, so now, I mean, I'm sure, corporate governance wise, you let us know whenever there's any news on this merger. But from Bank Dhofar's perspective, my question is, are you standalone, as a standalone entity, will you be able to achieve your ROE targets, or will a consolidation really help you sort of get there faster? And what's your view on Ahli Bank? Let's leave it to it. But generally in the consolidation phase, do you think that, you are sitting on excess capital and that's the reason where you can meet the shareholders' requirements a little bit sooner when it comes to the expected ROE? So, I don't want to really talk about Ahli Bank, but more because we never had an opportunity to understand the management's mindset about the merger, sir.
So I think, Abbas, everything that you said is true. In terms of, on a standalone basis, the bank has its own plans to achieve its targets. But we have been looking at the opportunities, and when there was an opportunity, we looked at it closely. And the capital being there was helpful there as well. So while we can't say much about when an opportunity comes, how it reflects, how we handle it, I think we are prepared both ways, if it has to be on a standalone basis, or when an opportunity to do a transaction or a merger that comes, we will do that. So open for all these possibilities. And we are preparing the bank in terms of getting the customer base, the network, all the other things, the basic ingredients which needs to be there in a good bank. That's really what we are focused as a management team to achieve.
Sure. With Mr. Ojeli, add anything, or this is it for now in terms of just?
No. Thank you for the question. I think Goba covered exactly what I was going to say. Is Bank Dhofar is the plans is always to achieve the goals that we have put together. Any merger or acquisition opportunity comes, that's addition to the organization. But we go as we are now always. Our plans is we go like that. If there is an opportunity come, definitely it will add value. And the mergers is usually not necessarily for the numbers only, but it's consolidation of organizations that make them stronger. This is an international phenomenon that's happening to strengthen the financial sector. And this is not only in Oman, it is happening in the regions, international. The world is opening up, and you need to be always in sufficient size for you to be able to support the government plans internally, as well as also to support your investors, whether internally or externally. So the size matters in the financial sector for sure.
Sure, thank you. Thank you very much. My next question is, you spoke about the pressure on NIMs and, it was very evident across the sector. I mean, it's no secret rates have gone up in the country. Is the worst of the NIMs degrowth behind you as Bank Dhofar, or is there still conversations on the asset side where you feel like, you could see some, or on the liability side rather, where you feel like customers are still coming back and asking for more rates, switching from current account, savings account to time deposit? Basically, my question is, do you see further pressure on NIMs or you think it's stabilized?
Yeah, ultimately, it depends on the funding profile of a bank. And if we are successful in executing the plans to have the CASA base increased, then obviously we won't have a drop in the NIMs. And on the contrary, we could see an improvement in the NIMs as well. So it all boils down to how well we are able to execute the plans. It's just coming down to that.
Okay. And my last question is on the write-off that I saw on the provisioning side as well as gross loans, I'm imagining. In the past also, if you've provided 100% of loans in any case, has that been the policy to write off the provisioning and the gross loans, or is this a sort of new way to? Because I know another leasing company that does this. Whenever they provided 100%, they write off the entire loan, and anything that comes, the recovery comes in the operating income side instead of the recovery line. So I'm just wondering, was this a one-off case, or is this a policy going forward that anytime you provide 100%, it's going to be written off?
I think, to the best of my knowledge, all banks in Oman do periodic write-offs when 100% provided accounts are there. And we have done that as well. I don't think we did that in 2022. So there was an opportunity here on a large account that was 100% provided, and we did the write-off. That doesn't mean that we give up our rights. We continue to pursue vigorously for recoveries from that as well.
Understood. There you go. Okay. Thank you. Thank you. That's all from my side. Thank you very much for your answers. All the very best to you.
Thank you.
Thank you, boss. Thank you.
Yes, Nitaika.
Yes, hi. Nitika here from Ubar Capital. Actually, most of my questions have been answered. Just one last one. So on the CASA ratio, that I've observed that it's been around 43-44%, and it is one of the lowest in the sector, so as to say. So want to understand the management perspective on where do you see it going long term. Right now, I understand it's a high interest rate environment, and it is difficult for anyone to move it substantially. But what would be your target in the long term? Say, 2 to 3 years down the line.
I would love to see that at 60%. But this is where we are. And in terms of the near-term focus, we would like to see if we can get it closer to a 50% or above 50%. I think more the better. And this is what I was mentioning to the question from Abbas. Ultimately, if you're able to execute that plan, it makes a huge difference to the bank's bottom line, both in terms of net interest income and everything else. So as a bank, we are very, very clearly focused on doing that.
Okay, thank you.
Thank you.
Thank you, Nikhil.
Since there are no any further questions, I will have to pass it back on the CEO for concluding this session.
Okay, so thank you very much for your participation and for your valuable insight to the operations and the results of Bank Dhofar. Your words are always helpful for us to look into our business and how to improve it, and focus on the development of. Thank you, and have a nice day for you.
Thank you.
Thank you very much, everybody.
Thank you very much.
Thank you.
You guys.